Hello everyone, welcome to Bhadra IAS online Nagaland Civil Service Examination Preparation Program. Today we are going to look at the topic of economics and the discussion will be on financial market. Financial market topic, normally you can expect it to come for your prelims examination because this topic generally comes for the prelims exam. So now let's have a broader outlook of the financial market in India. How do you divide the financial market? Financial market is normally divided into two parts. The first part of the financial market is what we call money market, and the second part is what we call capital market. So what is the difference between money market and capital market? Money market is basically a market for short-term borrowing and lending. Short-term here generally refers to about say 1 year. Whereas capital market is a market for long-term borrowing and lending. Long-term, when we mean by long-term, it is more than 1 year. So if you look at the division of the money market and capital market, the money market has basically two components. We will discuss also again. The first one is called banks, second one is called NBFC, the non-banking financial companies, corporations. Banks can be also further divided into different categories, but we have a two broader one, commercial banking and cooperative banking. Capital market is generally divided into two categories. We have the primary market and secondary market. Okay, so this together becomes what we call the study of financial market for exam preparation. So if you look at the money market, that is the first one. As I told you, what is the money market? It is the market for short-term borrowing and short-term lending. So the key point to keep in mind is this one, short-term. Okay, generally when you say borrowing and lending, it is for a period of 1 year. So money market is basically a market for short-term borrowing and lending up to a period of 1 year. Now, who regulates the money market in India? In India, money market is regulated by RBI. Now, this kind of very simple concepts can be asked in your prelims type of exam. Okay, so what is money market and who regulates the money market? As I mentioned in the beginning, money market is composed of two things. One side we have the banking sector, all the banks, commercial banks, cooperative banks, they all together becomes the banking sector. On the other side in the money market, we have a NBFC, non-banking financial companies. Like for example, insurance, chit finance, mutual finance, even mutual funds. Okay, so these are all what we can say NBFC type. Even hire purchase, lease companies. Okay, all that loans we take for EMI, purchasing mobile and all for 6 months EMI, that all will come under money market. Clear? So that is the basic idea of money market. So money market is a market for short term and it is regulated by RBI. Now let's look at the other side, capital market. The capital market generally refers to long-term borrowing and long-term lending from the financial institutions or market, whatever. So the long-term investments or borrowing is generally what we call it as a capital market. This capital market is now further divided into, as I told in the beginning, we have the primary market where the company goes to the public for the first time offering IPO, initial public offering. Okay, and the other one is called the secondary market, generally what we call it, if you see here, the stock market. So the primary market and secondary market are the two major components of what we can say the capital market. Now if you see this diagram, the secondary market or primary market, it basically has two types of subdivision. One market is called equity market. So what is the basic concept idea of equity market? An equity market is basically a market for shares. when company wants to get some finance, it will issue the shares to the public. Public will buy the share and contribute money to the company. That is what we call issuing of share, equity market. The second one is called debt market. Debt means what? Company is borrowing money from the people and the company will pay interest and repay the money. Correct? Now this kind of a borrowing is technically what we call it as a debt market. So to borrow money, here you see company issues share in equity market. So in debt market, what does the company issue to the people? They basically issue debentures, or what we can say nowadays, they call it corporate bonds. Okay, so the bonds and debentures are basically used in the debt market, in the capital market, and the shares are issued in the equity market of the capital market. Clear now? So now let us have a quick look at the various instruments in the financial market. Okay, so when you talk about finance market instrument, the instruments can be classified into two parts. We have money market and capital market. Money market is treasury bills, commercial paper, certificate of deposit, interbanking, that is the interbank borrowing and lending, and bill of exchange, or what we call trade bill. Now these five are short term. These are normally used for a period of up to 1 year. So therefore they are all called money market instrument. Capital market instrument, as I explained just now, we have bonds, we have debentures, and we have shares. Bonds and debentures are what we call debt market. Shares are what we call equity market. Clear? So exam, you will get this kind of question. Which of the following is a money market instrument or capital market instrument, which is a short term and which is long term? Therefore I have given you this table. It will be easy for you to understand. Now coming to the regulator of the capital market. Who regulates the capital market in India? The capital market is regulated by the Securities and Exchange Board of India, what we call SEBI. Now what type of body is SEBI? That also we need to understand. So if you look at SEBI, SEBI is basically a regulatory body, and it is also what we call statutory body. Okay, that kind of question comes in exam. What type of body is SEBI? So Securities Exchange Board of India was established in 1988. Then under the SEBI Act 1992, SEBI Act 1992, the SEBI became statutory body. Okay, it became a statutory body. That means it is the regulating authority of the capital market. Okay, so this kind of question of you will get in exam. So money market is regulated by RBI and capital market is regulated by SEBI, Securities Exchange Board of India. Clear now? So this is the basic we need to keep in mind. Okay, now we have to look at it. Who is the current chairman of SEBI? Because this appointment came this year 2025 1st March. Okay, so exam you will get a current affair question. Who is the current chairman of SEBI? So we have Tuhin Kanta Pandey. He took over as the 11th chairman of the Securities Exchange Board of India. Okay, and basically what is the role of SEBI? What does SEBI do? SEBI's main focus is to protect the interest of the investors. Okay, that means people who are investing money in the share market, stock market, or securities market. The SEBI has to protect the interest of the investors. Okay, that is the main concern. So the Securities Exchange Board becomes an important part of our study of what we can say the capital market. Okay, so now today we have discussed what is financial market. We started with the money market, capital market. Then we looked at the instruments of the money market, and the instruments of capital market. Okay. Then we looked at what is the basic difference between money market and capital market. As I told you, money market is for short term, capital market is for long term. In money market, all the instruments are called debt instruments, and in the capital market, we have a debt and equity instruments. Okay, so this is the very important concept that you have to keep in mind preparing the topic called financial market. Okay, for any further query, you contact Bhadra IAS online, Nagaland Civil Service at 8638391721, and keep watching our videos and following our videos, because we will be giving you more topics for your exam preparation. Thank you.